it's one of the clearest signals out there that AI compute is becoming a monetizable utility.
Man, what a crazy day in the SP 500. Not all-time highs, very close to all-time highs. But we are back, guys, live. This is the second attempt to go live. The first attempt was great, and we are here with the second attempt.
I love the live. I think it makes me feel like we have a live audience. It feels like more organic. It's just we're keeping it raw. I said in a really weird way right there.
Also, it's not like stale information. Like we're serving this information right now. So like anything can happen in the market. Like who would have expected Jerome Powell would have had the most non-climatic event we've ever seen this morning? It was the most ridiculous speech I've ever seen, not in my life, but pretty ridiculous. Anyways, we got Logical Thesis. We have Stock Savvy Shy. And we have myself, Sam, brought to you by Future Equities, Future Group. Thank you guys very much. Oh, man, what a day in the markets. There were a few themes that have been happening lately that have been super strong the whole time. I don't know. I'm looking at the RSI on it right now. And it's truly insane. It's one of the Future AI 15s, and it is just nonstop going up. That is IREN Limited. I mean, this thing is just nonstop going up. We have the data center thing. We have CIFR signed up a contract with Google. We have TeraWulf also signed up with Google. Applied Digital with CoreWeave. I think there was some news with Applied Digital after hours, and it's actually up after hours as well. Nothing from IREN as far as like actual concrete hyperscaler that they signed up with. They said they signed up with a major AI client, but they haven't said a name. We'll find out next week, because next week I'm thinking it might be Oracle, just speculating. But next week, Oracle is having a big event, so like who knows, maybe we might see something. But IREN is definitely pricing in something that market's expecting. Who knows what it is? But with that being said, I mean, I'd like to hear some of your thoughts, Shai. Like, what do you think about IREN, CIFR? I know Daniel has some CIFR. He bought some Bitfarm as well. But you guys are very strong with the data center theme. Like, clearly we saw that Microsoft came in toward the end of the day. Well, not Microsoft themselves, but it was reported that there's a data crunch with Microsoft. And the interesting thing about that is that immediately when people heard data crunch, they were just like, data center crunch. This is like so bad. Let's sell off the stock. But then people didn't understand, like, data crunch is actually a good thing when you think of AI demand. 314 Research came out with a good chart showing that AI demand for Blackwell chips is like through the roof, right? There's very little availability across the board, and you guys probably have that in your data sets as well. Microsoft then recovered throughout the day, and as soon as the market started understanding, like, hey, this is actually a good thing. So, well, like, what are your thoughts? Oh, go ahead. Sorry.
No, I just think that the market doesn't really understand the AI utility thing. I think they're trying to label it a bubble in a way. Like, perfect example, like before, we didn't even mention this, but yesterday, Amazon raised their NVIDIA Blackwell GPU pricing per hour. People, I don't think it got covered. I didn't see any FinTwit posts about it really. But that's massive for this AI utility thing, because it's one of the clearest signals out there that AI compute is becoming a monetizable utility, not just some kind of one-off hyperscaler CapEx expense. Like, the reason, going back to like the NVIDIA GPU pricing increasing so bullish, is that capacity is clearly sold out. That's the only reason you would increase the price per hour on GPU. If new supply was coming online fast enough, prices would fall. That's just basic economics. So right now you're seeing that the fact that Amazon's raising rates post Blackwell launch, which goes against everything you would assume in a hardware cyclical environment, that means utilization is maxed out. Backed up with what you just said right now about NBIS or Azure, they had to say no to clients because there's no capacity. It proves again the demand is running way ahead of deployments, and that is the whole AI utility thing, because GPU hours are the new commodity. The best when I was just did a couple of hits on TV today, this week, and the reference I was making was it's GPUs are the new electricity. Like, once there is a market-wide clearing price for computes, and Amazon just raised the benchmark. So I think these independent providers are kind of getting these instant margin expansion opportunities. Like, it's not just the NBIS, not just the the IRENs out there. It's also like CIFR, Galaxy, CoreWeave, like this whole bucket's kind of moving with each other a bit. That usually is an indication of very early innings of a re-rating that's just right. High tide raises all boats. Eventually, they're going to cipher off a bit because some names are more beneficial than others. Some are just riding the wave because it's kind of easy money season a bit right now. But it's really also important to know like these companies, these AI utility names aren't building models at all. Like they are totally playing the other angle of the AI trade, which is just selling the power, the cooling, the GPU time those models need to run on. So when you have the king of compute reprice, the entire market is going to have to reprice with it. And that's going to cause a automatic uplift with no incremental costs to these AI utility players. I know, Logical, you own Galaxy, so I'm sure you benefit. Say, I started an IREN starter position. I own some CIFR, NBIS. Like, I just think this bucket has so much runway, and knowing from all the research and work that we're doing on the Futurum side, like the AI data center build out is nowhere close to demand supply evening out. Like we're a quarter of the way there, I think.
Yeah, I gotta correct you. I actually sold my Galaxy. Every time you ask me about a stock, I always tell you
hit it and quit it.
Yeah, I'm really quick in this market.
Win is a win, and win is a win.
Well, so I actually really like Galaxy, and I actually do believe I'm going to regret selling that stock. It's sitting here at 40. I was in at 27. I actually, I could easily see this get to 60 on any near-term catalysts. Like there are a bunch in terms of, getting more energy capacity online. And if they can do that, then they're already, approved to build out further capacity in their data center for the Helios data center, which is, I think it's like 2.7 gigawatts and only 800 megawatts of it they've been approved for the energy side. So, and by the way, that's already been contracted by CoreWeave. So I think just with that 800 megawatts so far that's going to go out to CoreWeave, like that EBITDA is probably enough to support that market cap. And so any additional approvals probably sends Galaxy up a lot higher, which is for sure going to make me regret this decision. And I think it's something that is probably a late runner, but people are starting to realize what this stock is. People were just bunching it up with kind of all the crypto plays before because they do have a digital asset business. They have like a kind of an exchange business. Then they started doing like a trading platform recently that they launched. And, there's a lot of big crypto trades that come through their platform. They have a, digital asset balance sheet. I think it's worth a couple bill. Don't quote me on that. Haven't checked the latest numbers, but point is that, it's this crypto / data center play, but the data center side is definitely getting a re-rating right now, given what's going on with IREN, CIFR, etc. And again, they do have that big deal with CoreWeave. So it's kind of a very proven player, which is why I really like that name. And it traded like crap, but I felt like it was just getting accumulated every single time.
Well,
yeah, go ahead.
You're also not wrong though. Like on maybe things are overheating too quickly. I think a lot of times on re-ratings, people confuse not the if part, but the when. So typically they front run what's going to happen. And right now you're seeing these names all be above 100% above their 200-day moving averages, like all of them. That is an overextension. So like we could get a 20% pullback and they're still in a way overbought, or I think that we might need some kind of like, I don't know, 21 week EMA pull gut checks on like how real this move is. So like that might be a smart move the way you're doing a logical word, just like it might be a near term top.
Yeah, let me just expand exactly on what you're saying, right? Like, I think that we've already begun to price in a lot of these things, and I just checked Galaxy is exactly 100% above its 200-day, and I'm sure names like IREN are way above 100%. I mean, that thing's up 500% year to date. That's a six bagger this year, and most of that happened in the last like 4 months. So I think I get it. There's a ton of excitement. Rightfully so. There's a lot of business to be had in this AI data center space, but how much of it is been priced in? I think that's the question mark, and that's what investors need to answer right now. Is that like I could be totally off base, and it's like no. Like we totally didn't understand that the opportunity here is tens of billions, not just single dollar billions for each of these companies. Then it's like, oh, okay, then the backlog is going to be crazy. When it comes to kind of these Neocloud names, and we talked about this before. You told me in the last podcast, it's somewhat of a rental here because you still got to see this kind of play out. And I kind of wonder. I just, we had issues in the dot-com bubble. I'm not trying to say it's a dot-com bubble. We have very real applications happening today. But what about in terms of like the physical infrastructure of it, potentially becoming a little bit more outdated quickly. And like, think about fiber optics that, turned out to be, laying out tons of wire and what happened to the communication services then. But what were you going to say?
No, I mean, I do think if I had to pick a pocket of the AI trade that might be circa .com, it would be these AI utility names eventually, because when supply and demand evens out, I do think there's only a couple AI utility names that can actually thrive post this moment, you might say. Like, I do think IREN is one of those names that can actually, because they have this AI cloud in it, they have the best economics on efficiency. But you're right, though, like eventually, the reason I say it's a moment, like the issue though, the moment might be a couple years, and we know when the AI is in a bottleneck, it's explosive. Like, it really is. You saw it first with the GPU space, aka NVIDIA. You saw it with the networking, aka Broadcom and Astera Labs. Now you're seeing it in the physical, the railroad of the AI trade, which is these like AI utility names. Like, that could last a year, 2 years. And there's a world where IREN goes to 200 before things get, things are too ridiculous. Like, that's the crazy move.
I'm totally with you. And I want to go to Sam because I know we haven't gotten him involved yet, but just thinking it through, right? Like, I think all of our accounts are up a healthy amount in the last 1 month. And maybe that is because we kind of got like this second wind of the AI bull market from those Oracle numbers. I mean, that thing just woke up the market. And maybe you can even say, we saw in the MongoDB report, and that thing was up 30%. But clearly, like, the numbers, at least the projections and the guidance and the acceleration is there. And now everyone's extrapolating out that trend to every other holding in the AI space. And now the question becomes is like, dude, our accounts are up a lot. We just priced in a lot. I mean, I thought IREN was crazy at 40. It's at 60. It went up at 50% in like the last like week or two. I mean, it was already at 4x. I don't know. Sorry.
But like, we at Future, we talked to CEOs in the tech space, like the big whales. I'm telling you, the common theme is still demand is insatiable. There's nothing it's endless right now. It feels like there's no guardrails on when it's going to end until, like, I don't know, it just feels like we're stranded in the middle of the Pacific Ocean. And then eventually, like, when you swim to the sands of LA, that's when things are going to slow down a bit. But we're not even seeing the beaches right now in this like AI ocean. It's kind of crazy times.
Do you think that the Oracle numbers are legitimate, like 300% growth? What are your thoughts on that?
Oh, I think it's PR. It's definitely PR. I think, again, these aren't commitments. These are just like contracts. Like, there's a very big difference on what's actual, like, I'm obligated to do this. But I think it's important to not confuse corporate strategy with the reality of what's happening to the world, which is AI is only going to continue. It's just, I don't like the theater of it. It's definitely theater. We have AI theater right now. And if you're a CEO, it's kind of easy to like string that cord a bit because they know this is happening and it's explosive. So we're going to capitalize as much as possible. Sam, you're going to say something?
I mean, so there's RPO, remaining performance obligations, and that grew at 359% for Oracle. And I'm very familiar with seeing this numbers when it comes to a lot of software companies, right? But it's usually pretty consistent. Like, nothing just explodes out of nowhere and just comes up in RPO, especially when it comes to hardware and data center deals, which everyone's already skeptical about. I'm not long Oracle. I traded it when it was in the hundreds, whatever. But like, they have a lot of debt that I just can't seem to get over. And I'm not skeptical about the satiable demand. But one thing that I am kind of weird about is to like buy Oracle long-term at these levels. I know a few people that actually went long Oracle in the low $100, and that was a great deal, right? Like, obviously we're almost
now it's at 45 times earnings right now. Like, there's no way. Yeah.
And I guess the amount of debt that they have in the balance sheet kind of shows like, look, this company is not like printing free cash flow. This company, they are profitable, but like, they're not like one of the hyperscalers where their margins are really up there. Like, the market is expecting margins to expand when it comes to this business. They're expecting a lot more revenue to follow through from the backlogs or the RPO. They're expecting all of this stuff. Like, the keyword is expecting, right? And this is a keyword that comes with a lot of themes that are out there, especially the IREN ciphers and so on. Like, for IREN, is my mic not loud enough? Can you hear?
Oh, yeah, good.
I just, yeah.
Maybe it's because I'm not like talking right into the mic, but
yeah, good.
the thing is, like, when you think of like the CIFRs, IRENs, and Bitfarms and so on, like these smaller players, even when it comes to NBIS, like, but I guess I'm a little biased because I think out of all these names, as far as Neocloud and Bitcoin miners turn to data centers, which is not NBIS, but like I would include that like in that bucket along with the CoreWeaves, because these like new players in the realm, right? Like you had your hyperscalers that have been out there for decades, Azure, AWS, and Google Cloud Platform. And then you have these new players come to the field that are all of a sudden getting like these 15, 20, $30 billion contracts that for a much smaller company that was once a $15 billion company like NBIS, getting a $17.4 billion contract from Microsoft is like, holy crap, this company got like a contract over 5 years. Even though it's 5 years, they got it more than the market cap. Let's bid this sucker up, right? It closed at its all-time highs today. This is my most favorable play out of all of them. They're diversified in their businesses other than their core business of NBIS itself. But then now you have IREN out there, which is one of my most favorite names when it comes to the AI cloud space, or Neocloud space per se, which in this case, it's not really a Neocloud because Neocloud just focuses on AI workloads. This is like a whole stack, this kind of company. The reason why I like them so much is because they haven't priced in that major hyperscaler they made a deal with. They keep on alluding to it and all their comments, all their press releases, and so on, but they haven't announced it. CIFR announced it. Applied Digital announced it, even though CoreWeave is not a hyperscaler. They are funded and backed by a hyperscaler.
So,
and then,
question for you, Sam. Do you think the reason IREN's kind of sitting on this hand because the competitors you just announced, like they're not NBIS but CIFR, like they're renting capacity where IREN doesn't have to do that. They own their own stack.
Actually, CIFR, is it all rental?
CIFR's more of a landlord. The way I'm doing the work compared to IREN, like it feels more of a landlord.
IREN straight up is like they own everything.
Yeah,
they
exactly.
Go straight to the contractors. They build the data centers. They own the land and they spec everything out. Like this isn't really anything new to them. Like they have a lot of major data center hubs. Two of them are Horizons. They're both in Texas. And the third one is also in Texas. It's Sweetwater. Sweetwater is about 2 gigawatts of compute that they're going to build, capacity that they're going to build out. The other ones are actually in British Columbia or Canada, and those are actually hydro-powered, but everything is renewable energy. Bitfarms is also partially hydropower. The thing is that Bitfarms also got news, right? CIFR got news. TeraWolf got news. A lot of these companies got news, but like, where is IREN? Like, what is it? Google, Amazon, Microsoft, Oracle? Like, who is it? Right? That's the buildup with IREN. However, that's from a fundamental perspective. The technical analysis perspective within me, and I know Logical is very familiar with me as well as you, Shai, is that like, dude, this thing is running high. They just had almost a $1 billion senior note offering.
Well,
$851 million with up to about $1 billion. It's not oversubscribed yet, but they actually came to terms that that stock has to appreciate by 45%. So after today's rally, maybe like about 40%, in order to issue those shares. So if this stock is not like around $120, they don't issue those shares, right?
What's the interest on that loan?
I think it's interest free. Yeah, it's just free money.
Yeah.
But it makes sense though, because like if you look at IREN, let's go fundamentals again. Everyone looks at the PE ratio, like, oh, it's trading at 60 times earnings. It's too expensive. Look at the PEG ratio. Look how much they're actually growing their earnings.
I saw you post that chart the other day.
0.3. Their PEG ratio is 0.3. And to highlight what that means, Peter Lynch, if you guys don't know who he is, he's the GOAT. I actually don't know if there's a bigger GOAT in the space other than Buffett.
Pelosi is a bigger GOAT.
She's active. Yeah, you're right. But either way, Peter Lynch, like that's his favorite metric. Anything under 1 is way undervalued growth. Anything above.
Can I just push back as a math guy?
Yeah, what?
Because that means that like its PE is probably like 1,000, and then they grew like 2,000%, right? And which strengthens it.
152% growth.
They just
so they have a. I'm surprised that they actually have a PE that high, I'm sorry, earnings that high. I thought it'd be even worse. Because...
No, it's gap earnings too.
So, I have to look into those numbers specifically, but I just wonder if like, because it's off such a small base of earnings that the growth is so high, right?
So
but then...
I love that you said that, because the 2-year CAGR after this year is 45%.
But can we believe those numbers? I think you even said like Oracle stuff is PR, right? Like
but this one you actually have to, because they're putting the deals in right now. Their RPO databases and cloud is very tricky on RPOs and software. Like it's a totally different ball game. This is truly like the concrete of AI, like these AI utility names, and they commit, they actually spend it because they need those tools right away. So like they're getting the revenue ASAP. The RPOs are a little trickier thing, but I hear what you're saying. Like,
can I ask you a question about sorry, just because today's news came out about Microsoft. Did you see that?
brief.
They're running into like
out of my headline.
So I mentioned that at the beginning of the stream. So Microsoft didn't come out themselves. It was just a report saying that they're in a data center crunch. And initially the market reacted negatively to it because like you see data center crunch, people are like, or algos, I guess per se, that are parsing through these headlines and making moves in the market in billions of dollars of volume is like, sell Microsoft, data center crunch bad. But if you kind of looked it up, because when I heard data center crunch, I was like, wait, what's a data center crunch? I looked it up and basically it's actually a good thing when you think of supply. Data center crunch means that they are crunched on supply to meet demand. And then boom, it recovered toward the end of the day. May or may not have bought calls in the day. But anyways, I seriously, I looked at it and I was like, this is stupid. Why is this being so long?
Yeah, I mean, we're not ready to roll over in this theme. That's
no,
for
we're
sure.
not ready.
We're not ready.
The market gave you every reason to not roll over today.
So I actually want to, if we're done with this topic, I want to do a little hot take topic that's including all of us, and it's going to be about software.
Let's go.
Oh,
I don't think software is going to be anywhere in the spotlight for years, and I'll tell you exactly why that is. Like, I think we started this pod a year ago. Was it last summer?
January.
No, we started January.
Okay, so wow, what a year. It's been 9 months. Either way, so I thought that we'd be getting into that stage 2 of the AI era, the applications. That's really where the hidden gems get created decades down the line. Circa internet era was Microsoft, it was Amazon. This era, we're seeing the only stage 2 AI winner. Clear one is Palantir so far. There's some warming up names such as the Cloudflares of the world that have a monopoly, but I think that a lot of people, I don't think people appreciate how early we still are in the physical part of the AI story. Like for me specifically, I thought the AI build out or the stage 1 would last 3 to 4 years, maybe 3 to 5 years. So it's 2022, maybe it started happening this year, probably next year. Now I'm seeing the extensive build out of AI that's going to be in the next decade. And now that we're seeing all the bottleneck is going towards literally the plumbing of the new economy, which is again the power lines, the cooling towers, the GPU racks, etc. Like, I think that software is going to not have any kind of tailwind in the near term because you can't build the smartest AI agents in the world or agentic AI when you're just sitting in a laptop, like when you don't have enough. I mean, sitting in a lab where they don't have enough racks of GPUs, enough megawatts of power feeding them. Like, I feel like they don't have the scalability because these companies don't have the tools necessary to start. All right, what can we experience with the application front? Like, they're stuck on the physical build out. But Sako, you were like agreeing with me early on. I kind of want to hear your take on. I think software is a 2027, 2028 story, and I kind of downgraded Snowflake and Mongo a bit on my portfolio. Didn't trim my Mongo, trimmed my Snowflake. I sold from 5% to 4% of my portfolio.
Wow, insane move.
That's a big shy because for a shy, that's a big move.
No, you're not wrong because
I don't trim. I don't trim ever. I never trim.
I don't blame you.
Okay, so here's my thoughts. One, look no further than the technicals. Nobody wants these stocks. I mean, like, even Braze Software had a great report. Stock was up like 20%. I was like, wow, I just sold before earnings because I just saw what happened at GitLab and blah, blah, blah. And then this thing's up. And then, I'm like, okay, maybe, it's starting to consolidate. Maybe it's ready to head back into an uptrend. Boom, fails. And it's just even lower than like pre-earnings. So it's like, nothing is going to get these stocks going, and I'm not going to fight that trend, and I'm not smarter than the market. So here's one thing. Yes, sorry, go on.
No, I was saying, what do you think about Snowflake being the only software that's really breaking out?
That's what I was going to ask you. I'm surprised to hear that you are trimming, kind of the infra plays because, Snowflake, MDB, they kind of, and DOCN, I mean, they're kind of, the infrastructure. Well, no, they're not really.
DigitalOcean for sure is infrastructure. Mongo and database is very unique. I don't classify them in software. Snowflake, I do classify as actual SaaS, like in my opinion. Like, it's not data because it's a layer still on top of like other it's on top of other models.
No one's gonna build that, right? Like, it's
exactly
infrastructure.
But the consumption angle gets impacted because everyone doesn't have the AI hardware necessary yet. Like by impacted, I mean not having that breakout 30% plus growth that I thought they're going to have. Like they're actually
wait a minute, hold on. If sorry, and I just want to talk through this because I'm actually bullish on Snowflake and like, but I don't have a position anymore and I regret it because I was just looking at a 225 chart, looked beautiful. Now it's at like what 250. I didn't take a swing. That's life. But I don't know. It's something that, you know, your data as a company, as an enterprise is going to grow every year. We talked about this. That's why they have high net retention rates every year. And, you know, you don't need the AI hardware because you're running on a server. So I don't see the gap here. What's the issue?
Well, no, it's because the big AI budget players out there, they're not like going gun-ho to Snowflake right now because they're still locked up behind these physical bottlenecks is what I'm trying to say. Like, I think that eventually, I'm not saying bad things about Snowflake. I still own, that's my number one software name, I think, in the space. I just think that they're in like a holding period in a way where everyone is just going through such a physical bottleneck that if you're an AI native customer, you're not really exploring the actual application that Snowflake's offering in the world where right now they're going to continue trend setting the way they've been. But I was like underwriting the reacceleration. Like I truly thought we'd have early 30% growth next year for Snowflake. I thought it was going to be bonkers right now. And from the people I'm talking to in that space, Databricks is freaking killing it right now. Like they are eating Snowflake's lunch a bit on the client deals. They're underpricing everything on Snowflake because they're a private company. They don't care about margins and they're underpricing them. And then also like Databricks started as an AI machine learning lens where Snowflake kind of had a great pivot 2 years ago, but they started as a data warehouse to now a AI data platform.
Yeah.
That transition hurt them.
I'm in full agreement with you. I agree. Like I'm like data science background and like now I use Databricks. I used to use Snowflake. Now that I use Databricks, I'm like, I get it. Like before I was just like, oh, it's just some syntax fixes. No. It is much beyond that. It has all the capabilities. It feels like maybe Snowflake fits more into maybe a business analytics lens. And then the other one fits more as like a actual data science, machine learning AI tool. So I totally get that. Yeah.
Also, I think SPC is something that it's actually
they're not outgrowing. Yeah.
That's a big one. And now they're
a minute. They were,
and then they weren't. Yeah.
Yeah. And then that, I mean, okay.
Have you guys seen the chart though? Have you guys seen the chart?
I looked at the chart. I mean, we were buying that thing when in those little low hundreds.
You know why?
But this thing is going to like 360. This thing's going to 360.
I think it's because Snowflake has an AI lifeboat from the tsunami. It's just now I just think that you need to kind of trend towards gap profitability in a way. Like there's years, like I don't even know when they're gonna hit gap profitability, if ever.
Guys, I just want to say that I hear you. I don't think fundamentally it makes a ton of sense. That's why I typically don't own tech stocks. But looking at this chart, it's the highest close today since March 2022. It's in a very clear uptrend. It was recently consolidating, pulled back to the 21 EMA, and it just broke out of that consolidation and closed above it. It's the highest daily close in 3 years.
No, it's breaking. It's breaking out. No,
yeah,
I know, it totally is.
They're bearish on this one, but
no.
We have earnings coming, so anything could happen, right?
Sorry, by bearish, I mean I just want to get the AI utility trades. I'm underexposed on the IRENs of the world and CIFRs. Like I think that's where the bottleneck is for the next 1 to 2 years, in my opinion. So like Snowflake, like I just don't know. Like I just don't see the reacceleration like I thought I would until 2027. But the market's a forward-looking mechanism. Who knows? Maybe they're starting to price that in right now.
So I just fixed my mic, didn't I? It's
you're on your AirPods, weren't you?
No, it wasn't. No, I wasn't on my AirPods. My output settings and my input settings for my mic on my computer was like all the way down because I switched. Anyways, I'm Mr. IT. I apologize. But so you guys were talking about Snowflake earlier, and dude, we were buying the dip in the low hundreds. Remember that?
Different risk profile, though. Very different risk profile.
People were crapping on it. Sentiment was really negative.
So glad. Mm-hmm. And then now that it got up to like 230, 240, 250, trading on a premium valuation, price gain, all that growth, along with the assumed SBC is going to not outstrip revenue. Okay, this is a consumption growth model, right? they're no longer the SaaS model where it's like license based or seat based like it was before. It's more consumption based. So like they need to see continued growth in terms of this. They're innovating at the same time. At the same time, remember, the CFO of Snowflake is now Brian. I forgot
He's
the
from
guy's
GitLab,
name.
right? The GitLab guy.
Correct. So nice CFO there. I mean, there's that transition move. Mike Scarpelli, head honcho, CFO, along with Frank Slootman, like they're all officially gone. Like Frank Slootman's still there; he's still the chair. But Mike Scarpelli is no longer CFO. I actually don't know. Oh, go ahead.
No, I was the people I know in Snowflake, like Slootman, actually did not think AI was going to be a real thing. That's how scary behind.
That with innovation. Yeah.
No. He actually thought it was a fad initially in 2023. That's how scary
he took
Snowflake was.
He took them IPO, and he also took ServiceNet IPO as well. Like he's a monster, right? Like he's a beast. He's a very good businessman, innovator. That's why you bring ex Google engineer or ex I forget the name of the company that Sridhar Ramaswamy was from, but very big in AI, obviously from Google, ex Google executive, also AI product innovator at heart. Go ahead.
Short list on taking over Sam Altman at OpenAI when he was doing that weird sister stuff. I don't know if you remember. He made in the top 3 candidates.
Really?
That's crazy.
Yeah, so he's really big in AI. It's just like, for me right now, Snowflake's trading at 65 times free cash flow adjusted too. Rule 40 score, I'm looking at right now, is like 48. That just...
Shy, I see... I'm glad you have this perspective because and it's great. The way you're positioned in this stock is amazing. 1, you have a lower cost basis. 2, you trim down the position because you felt the risk reward is not quite there right now with the fundamentals. This is a melt up market though, which means it's going to go higher, which is why you're smart to ride that winner. I don't think anybody cares about valuation. It's clearly taking a step, it's taking a step back. And so, but I totally agree with you because from a risk reward perspective, people are like, for me, I think this stock can go to 360, right? That's another 35, 40% higher, which is good reward. But what's the risk? Risk is probably 35, 40% to the downside, realistically, to get back to a 40 times free cash flow number. When it's a 1-to-1 risk reward ratio, that's not a good bet to me. That's not a good, that I need probabilities, I need odds, etc.
The other thing is where do you put your capital in the market right now? Everything is freaking running hard.
I'm going
is
to
it
data center themes.
You don't think it is? Well, what pockets of opportunity do you see right now is logical?
Dude, I am 100% in biotechs right now. I have 0 others.
Those are running hot right now. They're on the daily. They're looking
this is 200% of year to date. I'm not going to argue with this guy. You're really smoking me right now.
Sam, what about me dumping Amazon 230 in January? What about me pivoting to China and Latin America around February when things were about to go crazy for tariffs? I feel like I've been able. What I am good at in general is I try not to go out of my lane. People are chasing these precious metal stuff and more power to them. People are chasing all sorts of specific sector things. I don't know that stuff, so I'm not going to pretend that I have an edge there and know when something is cheap. But when I have certain sectors or certain areas where I've followed along for a long time, and it logically makes sense where I can get good value there, and I feel that momentum is building. You can see it in the charts, you could see it in the volume, you could see it in the appetite. To me, if you look at XBI, dude, it was ripping today, and go on.
Do you guys remember what I've been saying in the beginning of the year? What names to own this year? CRISPR, genomic names.
True. Yeah.
They're killing it. And is it not too late for you, Logical? This is a multi-year base breakout right now.
I have I don't know. I still push back. Look, you know how I'm a fundamentals first guy. And I think that when it comes to the gene editing stuff, it's still kind of science project-y. Right now, we're just getting to a point where we're getting gene therapies approved, right? We had, Sarepta with Elevidys. I can never pronounce that. Elevidys. I don't even know how people say it. But,
CRPT?
CLPT, well, Unicure with Huntington's disease, which is probably the biggest story in biotech this year, for sure. It's the biggest, progression for humanity in the medical space.
ClearPoint.
I'd say. Well, yeah, so ClearPoint is a big, as a picks and shovels play, definitely benefiting from that. But we're just getting to the point where we're starting to get more comfortable and approve gene therapies. Gene editing, to me, CRISPR, Intellia, Beam Therapeutics, Prime Medicine, great names because they are highly shorted and the animal spirits are flowing, and you're seeing ARKG catch some, tailwinds. You're seeing DNA, Ginkgo. You're seeing, the
Well,
did you
see that Did you see that
AKA
RG breakout?
I was gonna say, AKA Kathy Wood's killing it right now. You
Yeah,
just memorized like every long name.
Well, what do you want?
portfolio.
What do you want to do right now, right? Like, look around you. Everything's ripping. You know, it's so funny, man.
No,
I
I agree with you.
I posted something too, and I was like, yo, like, okay, first off, I don't know about if you guys know this, but like, it's hard to get bearish when you're looking at small caps and you're looking at the IWM, and we are at literally all-time highs, broke out of where we've been basically flat for the last 5 years, could not break out of the 245 level. Now we are above it. So there are no such thing as triple tops. There are double tops, but there are no triple tops. So, we failed a year ago. We've reclaimed those levels and gone beyond it. Measured move is probably 300 plus. Now, if you compare like where we are today to where the COVID breakout was after the COVID crash, you could probably see another 3 full months of straight up vertical action. And I would not be surprised to see a rally into end of year. And logically speaking, I could see, January comes around, people start booking their gains for tax purposes because they don't want to do it now. So that's why you always get like, oh, if it's a red January, it's going to be a red year. Makes sense because people are selling in January. I mean, I'm thinking the same way. So I could see melt up until the end of the year because anyone who's holding right now is sitting on a ton of gains and they don't want to book those by end of year. They're going to try to spread it out. So I think we could see straight up vertical rally. And if the IWM's ripping, the constituents are a lot of regional banks, a lot of bios. You're seeing the XBI rip. You're seeing a lot of highly shorted names rip. I mean, the shorted basket is up the most this year for sure. I mean, bears are getting spanked. And yeah, it's a dangerous game to play. Sorry. But you get what I'm saying. So I've gone full bios because the thing is, I'd actually like to own small caps. I made a post and I said, hey, what would you own from small caps? And people like responded, and every chart I looked up, these things are up 400, 500% in like the last 2 months. And it's like, that's not an entry. So it's like, what can you own right now? Like small cap value? Maybe. That's not my cup of tea, but I love biotechs and they're trading for very good valuations. I can get behind that. Anyways, go.
No, look at the ARKG chart. I don't know if you got a chance to look at that. Logical, like
yeah, it's ripping, right?
No, it's going to keep ripping like 50 to 60%. I think my price target on that is honestly it might be the psych $50 level. That was the previous 2022 high after the first bounce. But either way,
if we're ever gonna break out of this stage 1 base, it's now or never.
It's now or never, and it finally looks like it's happening. So the thing about story stocks also that people need to realize, things can get overly ridiculous very quickly. It's like right now, the ARKG went from 18 to 32.
Shai, let me ask you a question, and Sam, you too. What's in the way of an absolute ripper? What's in the way? Maybe earnings, but no, I don't think so.
Just AI.
100% macro.
No, it's AI. No, it's just AI.
Yeah. AI is the macro right now. Like we're getting rate cuts, guys. Jerome Powell's nothing burger speech this morning was stupid. Did you guys? I don't know if you guys watched.
I didn't even know he had a speech.
I thought it was pre-recorded.
Yeah. No, I know. It was like 8:30. Jerome Powell's gonna make a speech. Like I saw this on like every single headline.
And for the crowd, that's 8:30 Eastern. That means Sam was up at 5:30 watching that thing.
3 o'clock Eastern, boy.
Hey, that's commitment, dude. I respect it.
But it was so dumb, and I think the market saw that and was just like, "Well, this was."
Has he thrown in the towel, or are we gonna regret these words come FOMC?
Well, it's Trump's Fed. That's at the end of the day. That's what it is. Like they know, like whoever,
right?
Yeah, whoever's going to take over Powell is going to be very, very dovish. And I think that market's probably front running that a bit. But also, like, we've been in higher for longer interest rate environment for years. And now you're seeing this like 2 or 3 year basing on a lot of these like unprofitable industries in small cap land finally breaking out. It's almost like the breadth is widening a bit where it's transitioning from
I think everything. Dude, it's the everything rally now, man. Like everyone already got all their alpha. There's no point in owning, I'm sure Amazon will rip to 300. God knows, right? We've always been saying it's going to 300. Fine. But are people really like, first off, retail bought stocks in the last month, like at record, historic record. Yeah. So
it's crazy.
Do you think they're buying Amazon at 230 to get 20% returns? No, man. I think they're going straight into the crazy stuff.
No, I think
IREN at 60, pushing it to 100.
I think Amazon is actually one of the few opportunities out there right now because nobody's talking about Anthropic.
Did you look at that chart?
Agreed.
So bullish. It was one
Yeah,
only Metcalf besides Netflix.
Look,
was just
it wants 275. Yeah, it wants
Yeah, no,
275.
dude, listen, Amazon, mark this, right? Amazon will re-accelerate AWS growth in earnings in a few weeks. And if they do, this is a $250 stock. It's probably going to be there by earnings. Okay. I'm so bullish Amazon right now. It's not even funny.
But logical to say, we're talking about, you and I are so bullish and we're saying 15 to 20% return.
This is like, fuck my 200%.
You're talking,
Yeah, I'm trying to double it from here, boys. So I don't know. I will say, like, dude, it's a fun time. I think there's a lot going on. I think, dude, you're talking about ARKG names. Dude, I still think that Personalis is looking beautiful. I don't know if you've looked at that chart recently.
Tempest is going crazy right now.
Tempest is going crazy. They own 18% of this thing.
That's what I'm saying. Yeah.
We are going to get insurance coverage. Dude, we're going to get insurance coverage in Q4. They said 2 of their 3 indications. That's what they guided for. So this stock is just running up and to the right every single day. It broke out from its range. I mean, give the people what they want, dude. These things want to go higher. I mean, we're going to rip. And so what I have done, though, what I can say, I sound so freaking bullish. I have taken down all of my leverage. I have 0 margin. Now, I've been saying all year I'm running 150% long. No. I have 0. I'm running 100% long. I'm fully invested. I'm not going to let my bias or whatever get in the way. I'm still going to ride this bull market, but I'm not going to ride it with leverage. I have 0 calls, 0 short puts, no options whatsoever. And I have no tech exposure. I have 100% long bios where I find fundamental values. And half of that exposure is sitting in names that have already released data, should probably drift higher. One of those names we talk about, Unicure, one of my top 3 positions. Look at that thing. It broke out today from its range, hit 64. Yesterday, Jim Cramer was out there saying, I don't know, that one has a lot of problems with it. And then today
he doesn't know anything about that stock.
Thank you, brother.
No way.
I appreciate you, Jimmy. Jimmy boy. Great market.
I mean, bringing up leverage, though, like, I think I might do a triple leverage play on Amazon in an earnings report.
That's nuts. Why not just play calls at that point? But I guess you can get out afterwards if you want.
No way. Calls. There's IV spike. I hate the earnings IV spikes and calls. Like early in my career, I've only really lost money. Yeah, leaps could work, but I'm so confident in the people I'm talking to in future space. Like AWS is getting discounted so aggressively from the mass audiences and also for a lot of people because they think that the way the Google Cloud finally cemented themselves as like we deserve a seat at the table. You're seeing Azure numbers look pretty good because you just don't know what's intertwined with OpenAI or not. It's really messy, their financial stuff. But AWS, like, God, they are still the king of compute. Like they just are. They fumbled the ball really hard 2 years ago, and they fired their AWS CEO, I think, because of it. Because the reason why AWS is like lagging a bit is they went way too hard on Trainium, like way too quickly. And they when everyone else was buying off the shelf NVIDIA chips so they can fulfill the cloud demand, AWS was trying to do their own thing and do Trainium. And now that kind of showed how difficult it is, aka Google's TPUs are in the only ones in the same category as NVIDIA chips right now. And that took 7 generations. AWS is definitely years behind that. And now you're seeing that they can't afford to be compute or energy constrained anymore. And that's what Sam is referencing. Like you're going to see a reacceleration. That's what I'm hearing too. Like there's going to be reacceleration. And I do think Anthropic is going to be their Trojan horse for that as well. But yeah, I don't know. It's tricky. Where else you should put your money in? I think
I was sorry. Do you have something else there?
No. Go on.
Something. Okay, this trade has not worked out yet. I think eventually something has to give. I've talked about housing a lot, and it hasn't really done anything yet. I know we're talking a lot of tech, but all I keep seeing is people slamming calls into Q4, and I just keep thinking to myself, like, why? Like, is there something I'm missing? The 10-year is like super stubborn. We're going to cut rates, which is probably going to make the long end worse because inflation is going to be sticky. Like, what am I not seeing? Because I was bullish housing, but without a catalyst. And, then I think about like, okay, Trump, mentioned we're going to, announce a housing crisis emergency in, the fall. Hey, buddy, it's the fall. People are betting on this thing in size, and I'm just wondering, like, are we going to get some sort of like, I don't know, imagine what I'm trying to say is like housing is a very big part of the economy. Right now, AI CapEx is taking up a big part of it. What happens if Trump comes out and says, hey, we're going to give first-time home buyers big incentives. We're going to do a rate buy down, 4% on their first loan. I don't know. And they're also going to do the bank deregulation where they can expand their balance sheets, hold more mortgage-backed securities. They can bring down that spread between the treasuries and the mortgages. I mean, I'm wondering what's going on because I'm just seeing nonstop call buying in that sector. And I'm like, I want to get long it. And I know it could be good to imagine how much it will help the economy. I was just listening to a podcast where they were like basically saying, when people move, they sell a bunch of things, they throw a bunch of things out. It just adds a lot of money back into the economy. And so that could be like a second wind for what could keep the economy going is like, I hate to say it, but more stimulus, basically. I don't know. I'm also selfish as a hopefully prospective first-time home buyer. So let's see.
Didn't Trump say that he was going to do some stimulus here? But I was like,
yeah, the $2,000 check.
That would be ridiculous. But
to go off for the rich people.
To go off of what Logical is saying, that like I am house shopping, the supply is juicy out there. Like there's a lot of supply now in houses. And there's actually some price decreases. Maybe because I'm looking LA and it's different here. I'm also looking at different other states, but like it's kind of a buyer's market. It's not like close your eyes and buy because it's such a deal, but like it's the best it's probably been in a while.
It's transitioning from sellers to buyers for sure. There's more inventory. I think people are starting to like, okay, I can't wait anymore. I just gotta like move. So the inventory is coming on, which is great. But as a buyer, the rates are still really high. The prices are still really high. And ultimately, I know like maybe there's some deductions. By the way, other states have had way more deductions in prices. LA's held up the most. So price resilience is really strong here, which is unfortunate for you and I. Or fortunate in the future, right? Because you know that your property is probably going to hold value. But also, I've been seeing that most houses are still very overpriced and going for over asking. So even though there is more inventory, it's still going over asking. So it's still a shit show. And if we have more like stimulus for like home buyer incentives, then I'd imagine that demand is going to come right back into the market, and it's possible that house prices go up even higher. So it's just really tough to even know what's going on. But clearly somebody thinks, or many people think, that housing activity is going to pick up. Maybe not in LA, but in general, maybe it's home builders. I don't know. Tough to say, but that's what the options chain is saying, basically.
So it sounds like the market's going to go up, but it also sounds
it's
the whole market's going to go up. I know, but it also sounds like the whole market's not going to go up because I mean, like we have every reason to go down. Every reason to go down. We have housing market slowing down. We have consumer sentiment near the lows. We have PMI manufacturing still, what was it, like just above 50, which anything below 50 is actually contracting. So just above 50. But then on the other side, you have the ADP, not the ADP, you have the Atlanta Fed saying that we're going to be growing at 3.8% or 3.9% for Q3. And then you have Powell basically cutting rates for the next two FOMC sessions, which is a total of 3 rate cuts this year. And they were pricing in 4 rate cuts for a minute. Not so much anymore, but like just for a minute they were. You have the market at all-time highs. It's green shoots. But then when you go out of the stock market, you have basically the K-shaped economy where the lower class is somewhat suffering. And I'm not saying this from first person perspective. I know there's a lot of people out there. God bless them. I hope everyone does well. But like, well, we need the rate cuts, not for upper class, not for middle class or upper middle class. We need it for lower class not because they're going to lose their job in like the next couple of years. Like I think that whole AI theme is like kind of unrealistic that it's going to happen next couple of years. But at the same time, like, they don't get paid enough to catch up with inflation. They don't get paid enough to catch up with,
and they're not going to though. That's the thing.
The only way really is to cut rates to basically bring the affordability up down more and bring wages up more, right? So as inflation increases, so do wage gains, right? But it's just, you're right. Like they're never going to catch up, and unfortunately, that's the case. And that's just the way the economy is built today.
Well,
Yeah, go
Can I ask you this, Sam? Like, do you think AI is the lever they pull to finally catch up to the rest, or is this just a tool that the rich will get more powerful and the gap will widen?
I mean, the rich is always going to get powerful because the stock market keeps going up and so does the housing market no matter what. And rich people tend to own more assets, or upper class tend to own more assets. And that's the reason why the rich get richer and the poor get poorer, because they tend to not own as many assets, or the average household does not own as many assets in terms of property, in terms of stocks and so on, as the upper class do. So you're going to continue having this K-shaped economy. Now, I don't want to get into the whole economy of exactly how things are going to go, but like when I really think about it from a long-term perspective, how do I say it's nice? We're screwed. Okay. Like I don't think this is going to work in the long term. I think we're all going to pay the price. I think it's going to happen at some point. My thing is that it's not going to happen today. So I'm going to continue enjoying it as the party goes on.
I agree. Like, we're not all screwed. I think that we're in a time where, I don't know, a 16-year-old, for example, can leverage AI tools and create an SMB all of a sudden with the approval of their parents, obviously. Maybe I should say an 18-year-old. I think we're in a democratization of, wow, anything is possible. Wow, wow, West, because of all the AI tools available. I think that white collar jobs, you should be worried. I think anyone underneath actually all levels. I think C-suite should be a little worried. If you're a freaking VP, good luck. You should be worried. If you're an analyst, all levels, you should watch out, because the way that's going to go down is they're going to lay off the bottom 25% of whatever workforce of the underperformers, the most inflated jobs, and the 10% of your workforce that actually leverages the AI tools that become 10x more productive with the same amount of time is going to make up those slack for the rest. And then as time goes on, you're going to see a workforce reduction of 20, 25% over time. Then all of a sudden you're going to see enterprises like, we need new roles for the new digital economy to monitor AI, and all these new jobs in this new AI economy is going to get created that didn't exist in the old economy. So I think that I went on TV last week and I said, like, these companies in 5 to 7 years, they're going to have the same amount of workforce that they do now. There's going to be layoffs in the first wave, but a ton of hiring in the second wave. And I think that during that second wave of hiring, that's when a lot of people can, like, that's when you can change your life. Like, you can change what you're doing right now in the old economy, do the work, learn all these tools, become not replaceable in the new age of new AI economy, and then you just all of a sudden change your whole family's life. So, like, this is the time when you actually should learn, figure out what the new currency is. And I think that it's a great time as an entrepreneur. It's a great time as someone who feels stuck, because that's what AI can provide, the ability to not be stuck anymore. And that's a great thing. We haven't had that, and who knows how long. It's been forever since society had a second chance to actually compete against the rich. Like, the David versus Goliath is very real, in my opinion, in the new economy we're entering.
Sorry, I just want to say real quick. I just saw Taylor mention to us that our comments are popping. Dude, this is our second time doing live. So I'm just seeing, like, we have like hundreds of comments, and I'm like,
yeah,
oh, my bad. People are like asking us, like, oh shit.
I've been trying to respond. Okay. I've been trying to respond.
That's my bad.
Oh, have you, Sam? I didn't even know. Yeah, I never looked at my comment section. My bad.
That's why I've been quiet. I've been trying to say to people, but to be honest, guys, we really appreciate you guys tuning into this. There's obviously so much more we can talk about other than the one that we can pick up in 60 minutes. And guys, this is entirely too much to talk about. So many things are happening in the market every single day. And I think a lot of this is attributed to not only the fact that technology is innovating so quickly at an exponential rate, but also the access to information at lightning speed is just growing faster and faster. With people are watching TV less. People are more tuned into social media, because that's where you get the most. You can literally find out the earnings of a financial company that you couldn't find out in the last 10 years or 10 years ago, other than a Bloomberg terminal. You can find that out instantly. The validity of that information is the most important part. And that's what we try to provide you guys, that information that is valid, not the noise out there, but the filtered information that you need to know. So With that being said, guys, really appreciate you guys tuning in. I mean, Taylor's our actually executive producer from TechStrong, part of Futurum Group, Futurum Equities. So thank you very much, Taylor. Appreciate you. Logical, Shy, and Sam, myself, signing out, episode 26. Take care, guys.